The Bank of Canada just raised interest rates by another 50 basis points. Is the market crashing? Is this a correction? What is the market going to look like? How should buyers and sellers approach this market? That and much more in today's video. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, you can find my contact information in the description box and on the screen with regards to my office information and address, my Gmail, ways to get in touch with me, and my Instagram and TikTok as well. Feel free to go find me on those social media platforms. As always, if you want to do a little bit of your own homework and due diligence before you get in touch with me with any questions you may have, feel free to just Google my name, go through my Google reviews of people who have worked with me in the past, so you know what type of person you would be dealing with. Anyways, enough of all that. Let's get to the point of today's video, which is just this morning, the Bank of Canada announced that they are raising the interest rates by another 50 basis points. I previously made a video about this, saying how it was coming, and I touched on some of the topics we're going to discuss in today's video in that video as well. But now it's official. So we no longer have to project, we no longer have to predict what's going to happen, although what most people predicted, including myself, did happen. Another increase in interest rates. This is the third rate hike. Two previous rate hikes occurred earlier in this year. The first one was a 0.25 increase in basis points, which occurred around March 3rd. The second increase was April 13th of 50 basis points. So this makes the third overall increase, but the second one by 50 basis points. We came into the year with only 0.25, right? Interest rates were historically low. One of the primary factors behind the all-time high prices and all-time high competition that occurred in early January, February, and a couple of weeks into March. Because when borrowing rates are very low, more importantly, supply is very low compared to demand. Demand greatly outweighs supply. Well, the low borrowing rates act as fuel on top of the fire. And that's what we saw. We saw a very hot seller's market. And guess what? I wasn't complaining because I helped a lot of my sellers sell for very great prices early in 2022. All the way up to March. Well, things started to change when the first increase came and the second increase came, mainly the second increase when we saw a drop in 50 basis points. Prices started to dip, the market started to soften, some say to moderate levels. I most recently called it a buyer's market because I went through all the conditions that need to be in place for it to be considered a buyer's market. And I saw all those conditions in place, both according to the numbers, average sold prices down, and the qualitative facts. I was working with buyers and sellers, and I was seeing firsthand that I was getting deals conditional for buyers. So buyers have more leverage. That's another condition for a buyer's market. Third, properties were staying on the market for a longer period of time. Once again, I was seeing it based upon the numbers and every day working with buyers and sellers. When we go to see a property, back when I recorded that video, and even to this day, we see that properties are staying on the market up to 20, 25 days, even 30 days in some instances. That is very indicative of a more moderate to buyer's market. That's the third condition. And the fourth, there are more listings available than listings that are actually selling. In other words, we can reduce that to demand is less than supply. Supply exceeds demand. The exact opposite of what was the case in a hot market, in a hot seller's market, where demand is greater than supply. Well, right now, according to how many listings there are available for sale and how many listings are actually selling out of those available items of inventory, we can see that supply is actually more than demand right now. So now that we are here, June 1st, Bank of Canada has increased the rates once again. What does this mean going forward for the Toronto real estate market and the GTA real estate market? And how should buyers and sellers approach this market? Well, I'm not going to pretend to be able to predict prices. That's something I always hesitate to do. What I like to do is work with what's in front of me. But I can confidently say, based upon historical trends and more macroeconomic trends that are outside of the sector of real estate, I do frankly believe that freehold prices will continue to decline a bit more in the suburbs, whereas Toronto, I think, will still decline but hold up a bit better because initially Toronto didn't really shoot up as much as the suburbs did. Here we're referring to Durham, we're referring to Peel, we're referring to York region. Furthermore, I do believe condo prices will decline a bit further as well, but in the same vein, I do believe they will hold up better than a lot of more higher end freehold options in the 1.2s and the 1.1s. Now, how should sellers approach this market? Well, I think it's quite simple. People who have purchased in the last 3 to 5 years who do not need to sell for life purposes should not sell and should probably wait until 2023. So let me say that a little bit more precisely. If you do not need to sell for life purposes ranges from a divorce to a job relocation to a need to downsize because you and your partner are older and you need to downsize, or a need to upgrade because your current space is no longer enough for you and your family or your life purposes, then you should not sell. Only the people who need to sell or want to sell for life purposes should consider selling. And if you have purchased in the last 1 year to 2 years, well, even if you have some of those life purposes, then it becomes somewhat of a discussion, because if you can actually afford to wait maybe 1.5 to 2 years, you're much better off waiting that 1.5 to 2 years. And here we're saying afford to wait, both in the financial sense of the term and the more figurative sense of the term. Then you have another category of sellers who are much older. They've purchased in 1992, 1988. Some of the clients who I've worked with in the past, who I look forward to working with in the future, are much older people who have purchased once again in 1992, 1988. Some of them even have purchased in the 1970s. And when you go back and look at the prices they've purchased their detached bungalow or side splits for, it's in the $100,000 to $200,000 range. Whereas right now, that lot, even in a down buyer's market, as of today, I think can go for 1.5. So to them, it makes very little difference if they could have gotten 1.7 in February versus 1.5 or 1.55 now, because they already have purchased at $150,000 to $200,000. Well, that is a much different case than people who have purchased in 2020 or 2021 even, who, by the way, in most cases are still up in terms of average sold prices, right? The person who in this case has purchased in 2020 or 2021 is still up. But nonetheless, that person, if they don't have to sell for those aforementioned life reasons, and they were only interested in selling because they saw what their neighbors were selling at, I will tell that person you're better off waiting. Now let's get to the buyers. On the flip side of things, I think it's a very good time to be a buyer right now in today's market. Right now is the time to buy. I've made this clear many times in my previous videos, and there are a lot of reasons for it. You can get properties conditional, do your proper inspection, proper financing condition, do your due diligence. You don't have to enter a bidding war, and if you are entering a bidding war, rethink who you're working with, because in today's market, to me, it's one of the dumbest things to enter into a bidding war. You can go for a property that's either failed because bidding war properties are failing. That's why I think it's stupid to go towards one, or one that's priced around market value, and let your real estate agent negotiate the price down for you and get you that conditional deal. And thirdly, there's no opportunity cost in lowballing offers, because once again, if you are a buyer who is pre-approved and your borrowing power has not been impacted too much by the increase in rates, well, guess what? You have a lot of leverage to lowball, to negotiate, to get the deal you want. That is what your real estate agent should be doing for you in today's market. And think about it, variable as of a couple of days ago was around 2.79. Well, I spoke to a mortgage broker just this morning, and they said they think variable is going to go up to 3.7. Now, if you get a property well below what prices were, not just in February and March, but let alone late April, early May, although your carrying costs have gone up, because once again, you're now in terms of variable paying 3.7 where you were previously paying 2.7, you're getting a property in some instances $150,000 to $200,000 less than what you would have gotten in February, and in some instances $25,000 to $50,000 less from what you would have gotten in late April, early May. Gross savings, the gross discount you're purchasing a asset at, that never changes. However, the variable you are paying, the higher carrying costs on a monthly basis you are paying, that is temporary, because the Bank of Canada is not going to hike the rates forever and keep them at these levels. Eventually, as they always do, it is a cyclical thing. Rates will go down, and so will your carrying costs. So you will have your initial purchase at a discounted amount, last forever, but your higher carrying costs will be a concentrated and short-term event. And in future videos, I can go through this in more in-depth, more number-oriented videos, because as always, I like to do qualitative and quantitative videos, and I will break down the numbers for you guys in future videos. In summary though, I think for most people, as I have established, it will not be a good opportunity or a good time to sell. And I think for most people who can afford it and who have been pre-approved, it is the right time to buy. As always, this is Sam from Saberi Real Estate, Remax Realtron Realty Inc. Thank you very much for watching. Stay safe and stay tuned. Thank you.